Hey guys, what is up? It's MADSTAR Investing. Today is the 26th of August and I'm back again with another video, and today we're going to be talking about implied volatility and relative strength index, also known as RSI, and I'll be teaching you guys how to use these indicators and what option strategies to use in different scenarios. So here I am on my TD Ameritrade platform, Thinkorswim, and currently on charts I am on AAPL, that's a ticker symbol for Apple. And currently you can see that Apple is trading at $206.20, and this is pre-market. On Friday's time it ended up at 202. So here I have popped up my RSI, which stands for Relative Strength Index, and I've chosen the settings for 21, 40, and 80. And basically what the RSI tells you is if the market on a particular stock is overpriced or oversold, and currently you can see it was being oversold and now it's beginning to come back neutral, and that's because of what Trump said earlier today. But because by the time I'm making this video, the trade war is happening, so there's going to be a lot of implied volatility, and that's why you can see this big jump on Friday with implied volatility because of what Trump said, and he just keeps on making these statements, and that affects companies like Apple because they make a lot of their goods in China, and what Trump wants to do is he wants to increase those tariffs so the goods actually become more expensive, and that will be a bigger loss for the company. So here I've got my implied volatility, and as you can see on my chart for 20 days, it's on an all-time high, almost. And the best thing to do when implied volatility is high, you've got to be selling options. So you want to have credit spreads where time is in your favor, and you're going to start to earn money as the implied volatility drops and as each day passes, and that is one of a really good strategy. And if the implied volatility is neutral, then you want to have things like iron condors where the stock can go either way, and if the implied volatility is very low, then a jump in implied volatility can increase the price of an option, so you can profit very well from that. So implied volatility is a very big part of options trading, and it's one of those things that actually prices the options, and especially if you have an option in intrinsic value before expiration date, that can also be very handy. So as you can see here for Apple, what I would do right now would be I would probably have a credit spread for 195 over here. I would sell the put here, and I would also have to cover it by buying a put because that will lower my buying power. What I mean by that is I'll need less money to set up this trade, and there's always a lot less risk if you cover it up. So the reason I would do this is, as you can see here, the relative strength index pops up and starts to build up, and I can see that happening here in the future as well. And implied volatility also dropping because Trump said on Friday that he is against the trade war and he retaliated against President Xi, and today on Monday he says, I'm totally fine, I'm fine to make a deal with China, and that can have a bit of an uptrend. So that's what I'll be looking at for the next for at least 1 month. So what I want to see here is the monthly tabs. Here are the different expiration dates. I have 32 days, which I'm going to choose because that's where you can profit the most, I feel. And here are just some probabilities of how much the percentage of it being in the money. Let's say I want to have a 70% chance of me winning on this trade, then I'll take the 195, and a 50-50 would be technically here because the stock can go up and down. So I want to have a little bit of favor as well, and that's why I'm going to go for the 33%, and I have a big margin to win here. It's not a 50-50. So what I want to do maybe is I want to click on this. I want to do sell vertical, and then this pops up with me selling them 175.5 put and buying the 195 put. So if you subtract 2.85 with 197.5. Yeah, so I would be paying for this one $279, and I'll be receiving $385 on this one. But that's obviously when the market opens. So if I confirm and send this order, I'll receive $44, and I'd have to put in $206 for this trade. So maybe if I went to analyze, that would be a bit better, because then we can actually see them. So here, let me go back to 30 days. I will take this one. I'll do analyze sell trade and vertical. And as you can see here, it has got everything set up for me. And the expiration date is the 27th of September. So today's the 26th. Apple price is 206. If I open it today, that's nothing, no loss, no profit. If I go one day further, then also not too much. But as you can see, as time progresses, this is going to start to build up in 30 days. And then this will be worth $206. I'm getting a phone call, so sorry for that. That was just my mom, and I'm gonna cut that part. So, okay, guys, I am back from that call, and here you can see as each day progresses, I will start to make money. And the good thing about this trade is that even if the stock price goes down, I'll still not lose money basically. So that's for now. You can see that if I opened it up at $206 and by 1 month it went to 197, I'll still be making a profit on this trade. And that just gives me a really big probability. And what can happen is, well, if it goes my way, let's say 4 days from now, the stock goes to, let's say, 213, which is very much possible. And I'll already make $21. So that's half of what I would actually make, and I'm done with that trade. And if, let's say right now, it goes to that price, 212, I'll already make $18. So that's what it does with intrinsic value. If I had got the Apple stock price at 213 today or in a few days, then in a very quick time it will become $44. So as long as it stays from here anywhere above the next 30 days, I'll make $44 on the trade. And the risk in this one is 4 times as much as my profit, because the profit is, or actually I would say 5 times as much, because my profit's $44 and my loss is $207. And you can see it's pretty steep, it goes here. So I'll reach my max loss at $194. But what you can see is if I reach $194 in the 5th of September, and my expiration date was 27th of September, my loss would only be $60. So that's what intrinsic value does. It's not in the money, my trade, it's out of the money. And as time passes on, time will actually be against me. And whereas on the upside, time will be with me over here. So that's a very good thing you can do with the Apple stock price. And that's my analysis. I'm not forcing you to use this or anything, but this is just one nice strategy I wanted to show you guys, and that you can use for very easy income, very good percentages, and you can also lower the profit you can get, but also very well make it a 90% trade. But obviously, the more risk you have, the more money you can get, but also more you can lose because of that. Because in a 90% trade, you're probably going to win 90% of the times, but not get as much. So it's up to you how you balance that off. But that's just my strategy for the next month, because I see something positive happening here. As you can see, the market's gonna rise probably. Maybe you can try use indicators like the moving average or something. But I think RSI, relative strength index, is a very good one here, and also implied volatility for which type of option strategy you want to use. So I hope you guys enjoyed this video, and let me know down in the comments below if you have any questions you want to ask me. And make sure to subscribe to the channel for more videos like this, and I will see you guys next time.